All right. Well, I am actually going to stay seated so that I don't stand in front of the screen. But hopefully everyone can hear me all right. And one of the rules of this whole thing is interrupt anytime. All right. It's very informal. If you have questions as we're going, I'm gonna throw a lot of information at you. But you'll be able to watch the replay at any time during this week. So our company is actually Rapid Funding Solutions, and we go by RFS most of the time. We are actually headquartered here in Kansas City in Old Town Overland Park. We are lending pretty much in all states. I think we have even touched Alaska at one point, believe it or not, for someone doing a fix and flip. All right. I'm going to get into our programs a little bit. And just real quick before I do that, my name is Milton Jeffrey. I'm actually the CEO of the company. We are a small company. There's about 10 of us between our loan officers and processors. We started as an affiliate organization, and we had over 200 affiliates working for us. And we realized it wasn't a good way to service our investors. So we took a step back and we scaled things down so we could really focus on building relationships with all of the investors that we work with now. And I'm going to talk a little bit about that kind of as we go through some of this. So we are a private capital company, and we find that a lot of folks don't really understand what that means. And the reason I say that is because private capital basically means non-QM or non-bank qualifying mortgages, ultimately is what it is. So it puts us into a place where to qualify for the types of real estate investor loans that we do, you don't go through the typical way of qualifying like you would with a bank. We are low doc, light doc, but we are super competitive. And we'll talk a little bit more about that as we get into programs. We are a one-stop shop. And from a high level, the reason I say that is because we've had investors that started with us that were just buying rentals, and we helped them transition into buying fix and flips. We've then helped them transition into doing new construction on single family homes as first time investors. We have real estate investors now that we just help one buy a liquor store, buying gas stations, and all of that. So we don't look at ourselves as just limited within the scope of capital that we give folks access to. It's a lifestyle. So most of our investors that start with us, they have goals and they have visions. And what we try to do is make sure that we create a plan that helps them scale and helps them grow no matter what direction they're actually going into. And so that's why I say that we are a one-stop shop. We are a private label lender, which means that we can underwrite and close loans within our private fund, but we are also a correspondent lender. And so we have access to private institutions, private funds, and then we also have access to what's called family offices. That access literally gives us access to billions of dollars to lend at any point in time. So we're not restricted on capital. We just like deals, As a private capital company, one of the things that, yes, yeah, okay. Sharif is on it. Yep, that's all right. That's all right. Um, and so, you know what? I'm going to check really quick just to make sure that everyone is able. All right, perfect. They are hopping on the link. I can see it. As a private capital company, one of the things that I try to stress is when a borrower comes to us and they say, "Listen, I'm looking to purchase something," we don't just dive like right into, "Oh, we're going to finance this." What we do is we ask questions, and in doing so, we were able to learn. I think one of the borrowers that came to us through you guys, kind of in our first conversation, as we were listening to what they were saying, they let us know like it had been a little while since they had bought any properties, but they had done a lot of properties in the past, right? As we were listening, we understood and heard that they had a 1031 exchange. That we got to learn what their plans were about the property that they were looking at. And in doing that, we understood that there was a member of their LLC that had done a lot of renovations, but hadn't done their own flips. And because they were on the LLC, we were able to listen to that and say, okay, we can actually leverage the work that you've done outside of those flips to count as experience for you to get you a better rate in term. So we feel like it's very important to get an understanding of our borrowers, really listen and learn what is it they're looking to do and what their plans are. And then we were actually able to work with them on how much they wanted to invest on the 1031 exchange and all of that, because they had a term sheet before they got to us from another lender. And when we looked at it, we saw that on that particular deal, they were only getting about 70% on the loan to value, which means that they had to put 30% down. I think at the time the rate that we looked at was somewhere around like maybe 6.65%, but they had around 10,000 in there on the rate buy downs. And as we dug into it, we saw that it was because the lender was basically letting them buy a rental, but on a second home loan, right? So in a second home property rather than just an investment. Because of the way that banks loan, they have to think different. In the non-QM world, we don't have the limitations and restrictions they do. So, when I was buying and wholesaling and flipping and all of that, I ran into those limitations where if you're going through regular conventional financing, you can only have, back then it was only 8 properties in your portfolio before you could not get financed anymore, right? So in our world, on the private capital side, there's no limitations. If you want to buy 100 properties this month, we'll keep financing those for you. So we learned that in listening to our investors, understanding like what their goals and their vision are, we can actually then come back to them with programs that are going to make sense, programs that will help them scale, programs that will help them solve their real estate goals as well. And we give them access to capital in a number of ways. I'll be touching on this in some of the later slides, but there's a little bit of a difference in the understanding of private capital versus hard money capital. And we're going to touch on that. We get a lot of folks that call us and they consider it to be one and the same, but it's a little different. So we're going to touch on that. And then when we say access to capital, we also have programs like gap funding, for example. This is a term, again, that is just used way too loosely on the internet. We get folks that call and they say, yeah, I want gap funding, and they believe it's one thing and it's something entirely different. But we have investors that we have helped. We have an investor in Texas that came to us and said, hey, I've got to buy this property, but I'm also in the midst of a commercial renovation on another property, a small balance deal. And so my cash flow is a little tight right now. So what we did is we put him on our unsecured gap funding. We were able to close 100,000 in capital within about 7 or 8 days. That is unrestricted. So they were able to then go and use that in the real estate deal while wrapping up the commercial deal, and they didn't have to miss the opportunity to close that single family deal at that time. So we have access to programs like that as well. On our real estate investor mortgages, everything that we touch is non-owner occupied, right? It's all about the investment deals. Either you're buying something that you're going to flip. We do transactional too, where if you're just wholesaling it. We do rentals as well, which we'll talk about. We do low doc, light doc, and I want to explain that. Back in, I would say, up until about May or June, when we had an investor come to us and they said, well, I'm looking for private money, because I already have too many properties, in my portfolio. And they just said, man, like, what are the rates going to be like? And they didn't understand that in the private capital world, up until about June, we were funding rental acquisitions at 3.1% without verifying employment or income, right? So they had no idea. Like in the private capital world, if you go low doc, they believe that you may pay a price for that. Now, there is a little bit of a rate adjustment when you're going low doc, light doc, but it's not to the extent that most people thought. And so what we use when we qualify an investor, we need LLC docs primarily. Depending on the program, we may just look only for cash reserves. We will not check employment. We will not check paycheck stubs. And 99% of the time, we don't even need tax returns to achieve, the competitive rates. Now, the markets are different right now, so they're not at 3.1% anymore. But I just wanted to elaborate on that a little bit so that you understand when you qualify with us, it's not the same underwriting process that you normally probably are accustomed to when you go in the conventional world. And the rates right now, as we'll see in a little bit, when folks come to us and they're doing like 30-year loans and they're buying whether it's another rental or an Airbnb, rates right now are still in the private capital world have a rate floor still of around 6.5%. We've just closed cash out refis at 6.8 in the last few weeks at 75% loan to value. Right now, rates fluctuate every day, as you know, and Fed just raised them again. But it isn't to a point that is detrimental, so to speak. And on our bridge loan products, we do fix and flip, and we do new construction. And We also have folks that are just buying, they need to grab a property really quick, snatch it off the market, get an offer, get it bought, and then they're just going to do some light cosmetics, right? So they don't need us to fund the rehab side of it, they just need to buy it. We do that type of financing also on our bridge loans. And all of the bridge loan products, as we'll get into, they're all short term. They're all interest only, no prepayment penalties. If you go into one of our bridge loans to buy a house for any short term purpose, you can exit it at any point in time without having to worry about paying a prepayment penalty and such. And again, we do a lot more new construction these days than we have in the past because, as a real estate investor myself, it seemed like there was a period in time where just everything around was already bought up and rehab, right? And so folks started expanding, from Prairie Village, from Leawood to Prairie Village, and expanding into some of the outer areas. We had folks doing buying homes in Raytown, rehabbing and flipping, and then we had folks coming back just buying lots because the inventory had shrunk in such a way that they wanted to further their business, and so we helped them transition from just the fix and flips into doing new construction. And we can do even for like first time investors that say, hey, you know what, I've got a great deal on a lot that I'm going to buy. We have programs that will go up to 100% of the new construction costs. Even as a first timer, it can be done, right? So we'll touch on that a little bit more here. On our 30-year programs, basically buy and hold. We do long-term rentals and we do short-term rentals as well. The long-term rentals is your typical anything from single family on up to 5 units. You're just going to buy it, duplex, triplexes, fourplexes, eightplexes, all of that stuff. If you're just going to buy it and hold it and you're thinking, I just need 30-year money, we have programs that also have the 3-year options, 5-year, 7, 10-year options as well on those types of acquisitions. And then we do a lot of short-term rentals as well, which is basically Airbnb. We were running a program at one point in time that was going as high as 85% loan to values on the Airbnbs, but right now in today's market on purchases is right around 80%. The example that I gave of the borrower that came to us who had the term sheet at 70% loan to value, one of the things that we were able to bring to that borrower was the fact that we can actually give you 10% more on your leverage on your loan, right? So now instead of having to come to the table, with 30%, you can actually come with just the 20%. And we were actually able to, I think, be within a 3/8 of a point on the rate without them having to pay a $10,000 buy now as well. So we try to be as aggressive as we can when it comes to the 30-year notes as well. But we have those programs. We get a lot of investors that say they've been looking all over the market trying to figure out where can I get an Airbnb loan. Well, in the non-QM market, private capital, it's actually really, really easy to achieve through our programs. And we, since COVID, closed a lot of Airbnbs. I think we have one investor that's probably on their 10th or 11th between Destin, I think it was Daytona Beach, Pompano Beach, and those places in Florida that are just more of like tourist places. Okay, so the property types, we get this question a lot. We do single family, anything from 1 unit to 4 units. And then we have programs that will do the 5 through 20 on private capital. And then once you switch from 20 units on up, it's more of a commercial type of program. And in those types of size of deals, we have private institutions that we will underwrite those to. Still private capital. We are right now reviewing and processing or underwriting deals that I think there's one that's maybe 110 units. That's a new development, but we can do like construction funding and stuff like that on those deals. But in terms of the property types, we also touch outside of just the residential. We get into the commercial spaces as well. And as I mentioned earlier, we had a real estate investor that we did a number of flips for. Came back and said, hey, I'm looking to buy this convenience store that's cash flowing really good. The seller's looking to retire. Can you guys help me? And so we were able to help her with that particular deal as well as just, retail buildings, office buildings, things of that nature. Sometimes you'll just get a good deal that comes your way and you start thinking, okay, where am I going to get financing for this? Or what would terms even look like? Right? One of the things that we'll do is we'll hop on the phone with you and we can at least walk you through it. Whether you're going to buy it or not doesn't matter. If you're saying, I just need to understand, like, what would it take to qualify? What would rate and terms look like to go buy this small strip mall for maybe 300,000 or 600,000 or something? We can do that. We're doing some event venue acquisitions in town. I think anywhere between 3 and 8 million right now as well. So it just depends on what you're looking for. We have the capability to help you at least assess that thing and see what is the financing structure going to look like. All right. Programs available when we're talking the short-term bridge. This is a really good slide. All right. The reason I say that is because in the private capital world, if you're thinking about doing fix and flips, we have programs that will do 100% of purchase and 100% of the rehab up to 70% of the ARV, right? The reason I've got a little asterisk here beside this because that's one of the rare times we might ask you for a tax return, okay? And there's a workaround to that by simply providing a P&L statement. And the reason for that is because that particular loan fund says, hey, listen, if we're going to take 100% of the risk, we just need to make sure you've got sufficient cash flow. That's it, right? Other than that, the 90% of the purchase price, 100% of the rehab, and then typically 70 to 75% of the after fair value. That's the most common program that we see on folks that are out looking to buy, fix and flips. And ultimately, what that means is that when you go put a contract on a property, we'll finance 90% of the purchase. You'll have 10% down. We'll do 100% of the rehab within the 75% of the after repaired value is how we do it. And right now in today's market, a lot of the programs that we have them available on the private capital side and then also on the hard money side. We'll talk about that in a side. And so the reason you see the credit scores here is because we have programs that are 680 and up, 620 and up, and then we have investors like we have some now that, and I think it's the Baltimore area said, they're in this 5 or 6 deals at once, and they said our credit lines are maxes. We got a bunch of rehabs going, and so my score tanked, and I don't know what to do. And it's for us, it's a non-issue because we have programs that will still finance them, on the deals that are coming their way without having to worry about the score still falling below, a 680 or 660 or 640. We have programs that touch just about any score, right? And all that happens is we may transition from a private money deal into just one of our hard money loan programs in order to accommodate. You can see here on the 620 scores, even we're still doing 85% on the purchase, 100% rehab. We can get up to 65%, but or up to 75 in some scenarios, but typically 65% of the ARV is where those programs land. And again, if you've got a scenario, we always tell folks, just hit our link and send it. We don't ask for social security numbers and all that. If you just tell us the score, the property address, the purchase price, what you're estimating your rehab budget and ARV is, we can get you a term sheet. And the reason we function that way is because since we don't verify a lot of information, it's safe for us to give you a term sheet. And we tell investors this all the time. That term sheet that we give you is the same one you'll close with. Is nothing's going to change unless information that you gave us changed and nothing else has changed. Like the term sheet we give you on day one is exactly what you'll go to closing with. If you go make an offer and you come back and say, my contract got accepted, right? All right, so on the buy and hold programs, rentals essentially, 30 years, we talked a little bit about this, but again, in the private capital world, we still have a lot of options available on the 30-year acquisitions. We can do 3-year, 5-year, 7-year, 10-year notes as well. And we have, again, rate floors right now in this past week for us. We're still at 6.5% with maybe a point or so on a rate buy down, but rates are still respectable. I would say. Now we have folks where you get into the lower credit tiers where they might see 7.5%, 8.5%, but it depends if it's a cash out refinance. It just depends on the whole deal. On average, for the long term and short term purchases, we actually beat all conventional lenders because we do 80% on the loan to value, where most of them will fall in at 70%, right? So we'll do 80% on the loan to value. With only 20% down. And again, the trade-off that you'll get in the rate is nominal. It really is compared to where rates are today. Stated, pretty much everything with us is stated. We don't verify employment. We don't verify income. You probably saw on one of the previous slides where we might just make sure that you have either enough cash and liquidity for your down payments and the kickstart renovations. Our underwriters might just ask for any bank statement that shows you've got your down payment available. And some of our programs don't even ask for that and are still putting out rates under 7. on 30-year money. So when we look at the deal that comes in, we can really assess very quickly on the information that we get, what programs are going to work, and we are not shy about saying, hey, you know what, we have a couple options for you. Here's what we think can work, and actually let you decide what is going to work best for you. All right, so the private money versus hard money. This is something that we end up having a lot of conversations because not all private money is hard money. On the private capital side, as I mentioned, we can do 30-year money still, 6.5%, depending on the deal. And even up until June of this year, we were doing 30-year loans for our investors at 3.1, 3.25, right? Which was just incredible rates. I wish the market was still there, but it's not right now. But we have hard money as well, hard money programs. And those hard money programs are designed to be able to move very, very quickly. They're also designed to manage different situations, different scenarios, whether it's credit, whether there's credit issues, or whether it's just a need for speed. The hard money programs I want to mention for a moment, because when you hear about rates that are 12% and 13%, that can be an immediate turnoff, right? But the thing about it is it's no more than a strategic tool. That's really all it is, in my opinion, and how we advise our investors to use it. So we had an investor come to us that needed to grab, I think it was two properties I think it was in the Chicago market. He said, man, it's super competitive. I got to move quick. I don't even care about the rate and term, because if I do this first one, I'll probably net 75,000 when it's all said and done. And so we looked at the deal. We called our appraiser. They got out there. I think we closed that deal in 7 days, record timing. But this is the thing about these rates. When you look at the hard money that just needs very little verification and move quick, the APR is just one example at 12%. The whole goal of that money is to basically earn 1% in interest per month. So when you're doing a deal that you're purchasing on the hard money programs and you've got an APR, and I'll be honest with you, a lot of our hard money rates I've seen is just like 10%. I haven't seen 12% in a little while. But for example's sake, 12% is ultimately 1% per month. Most of our investors turn their deals within 4 to 6 months. And if you exit within 4 months at 1% per month, you actually only paid 4% for the money, right? If you exit in 6%. So we have folks that came to us, again, where the credit score dropped down just because their credit utilization was high on their lines of credit. They still were able to get in and out of a deal on a hard money rate and exit within 4 to 6% for the money. And they were like, man, that's just insane, right? So for us, we don't look at it as a hindrance. Again, it's something that to us is just more of a tool. Is it a tool that gives you the speed and flexibility you need to get in and out of a deal, still at a cheap cost of capital, given the time that you use it, is how we view it. So we make these programs available because there is a time and a place for them, right? And that particular program still hits 85% on purchase and 100% of the rehab, right? So it still allows you to get in and out of deals if it's something that is required on the hard money programs as well, in many different scenarios. We get this question a lot, what liquidity do I need? Basically, what cash do I need to show? We've kind of touched on that a little bit. Sometimes if you're buying a rental, we might need to see the down payment somewhere in a bank statement. That's it. If you're doing a fix and flip, we may ask to see that you've got cash to kickstart your reserves, and again, the down payment on that. Not all of our programs require that. So when we're talking to an investor, we can figure out what program is it that we need to use that they'll qualify for, and when it is required for the liquidity, we keep it very simple. Sometimes it'll be a need to just see a 1 or 2 months of business bank statement. Most of our underwriters can use even like a retirement account or a savings account, and then other programs we just won't need to see anything at all. We even have a program right now that allows the investor to show like that they've got credit cards that just basically have a low balance that they can use to kickstart their rehab and then get the reimbursements throughout the renovation process, right? Our programs were designed to be extremely friendly and very useful and advantageous to our real estate investors. So there's a lot of flexibility into that, right? And again, this presentation will be ready for you guys right after this meeting. We'll have a link where you can go back and watch it throughout the week as well. So you don't have to remember all of this. We don't expect you to. A lot of details here. But in terms of the liquidity, just overall, I mean, it's very simple. You know, we can look at retirement accounts, we can look at bank statements, just a business bank statement, a month or two, and they're just looking for a certain amount of cash for the type of deal if it's required. Uh, some of the things to know, as we call it, term sheets. We have a lot of investors that say, "Listen, I got to go make an offer," and they won't take the offer unless I can show proof of financing, right? Um, and what we do, there's two parts to that. We can, as long as you send us the information over on our link, we'll get you a term sheet and we'll get you a proof of funds letter. Again, the reason we do that without you having to submit a lot of stuff to us first is, again, we're non-QM, so we're low dot, light dot. If you say to us that your credit score is X, this is the property I'm buying, and yes, I've got the cash, we can get you a term sheet so you can at least go make your offer, right? And show, because we can close it, right? We can close no matter what, but you can at least go and show the offer that you are qualified, and that realtor or sellers or buyer's agent will take the offer seriously, right? It's a super competitive market, and again, we do lending in basically all 50 states. The rural ones are a little tougher, the South Dakotas and North Dakotas, but it's competitive. We noticed over the last year and a half, 2 years, that most every contract we see also says that it's a cash deal, because most of the times when folks are out there and they put out an offer, the seller and the agent looks at it and says, well, this one's contingent upon financing and this one is just cash, right? But what we've seen is every contract says cash. It's rare to see one that says it's contingent upon financing. So we get a lot of investors that call us up and say, I just want to be pre-qualified so that I can go make the offer. If it gets accepted, I can keep moving. And so we just did, I'll give you an example. We just did a couple of deals in Miami. And the investor came to us, had just great experience, great credit, good cash flows. And so what we did is we sent them a document. We put them on a $3 million line of credit to go and just start slamming through deals. And those are decisions that we can make internally very quickly, just by looking at some high level information. We may verify some LLCs and maybe a little bit on liquidity. But he was able to take that line and we closed on the first two loans. Third one's already in the pipeline. And I think in the first 30 days, we probably did close to $1.5 million in closings with him. Just very fast, very, very easy, and very, very efficient as well. So term sheets, don't feel like you've got to send your life story over to get one. If you just got your LLC name, your name, and you got the property address, purchase price, if it's a rental, purchase price, if it's a rehab, estimated rehab and ARV, and we can get you a term sheet that you can look at and say, okay, this makes sense, or no, I don't really like this. Maybe we need to look at something else, right? Again, we're not bashful about giving you options. If we look at something and we're pretty good, and so my processors and underwriters and our loan officers, about looking at a deal and saying, okay, this one looks good, or let's see if we can tighten this up a little bit before we even send it out, right? In the non-QM world, all it takes to really qualify is primarily having your own LLC, right? Because every deal that we close it in your LLC name, right? Which of course has a valid EIN, an operating agreement, articles of incorporation. Those are the things that we will actually ask you for, versus paycheck stubs and tax returns and all of that stuff, all right? And in some states, we have to use a certificate of good standing. Newer entities actually don't require that. Some of the fees to know about. We have a couple of programs where an investor looking to purchase a property will pay for the appraisal upfront and just collect it at closing. We have other programs where there is no appraisal cost at all. We manage it as what's called a desktop valuation. So we have investors that just got to move quickly through flips, and we say, listen, give us the comps that support your ARV. Sometimes I'll have a realtor that sends a CMA over. We'll use those comps for our desktop valuation as long as they're realistic, right? Within the last 6 months of sales, etc. We can use those, and then we shoulder the cost of the appraisal and the inspection in order to just move the deal quickly. If we're doing a rental purchase, typically those do need a full appraisal, and those can run anywhere between $450 and $750, depending on. We see all types of prices just because we're in all states. Some of the loans can carry a credit report or background check. There's typically, when that's required, typically no more than 100, 150 bucks, something like that. And then obviously when you go to closing, all of your title company fees. But you would always get an estimated HUD before you close on any loan, and then whatever the loan origination is as well. So with that, that is the conclusion of our presentation today. But what I would actually like to do is also open it up for questions. You know, in the type of lending that we do, again, we mentioned we do long term, we do short term, we do fixed and flips, we do bridge with cosmetic. We also do commercial, single family, multifamily, and then we have some of the auxiliary programs, which also can do things like the unsecured gap funding, things of that nature. So, really, just curious. You know, what questions you might have for us just in terms of programs. Is there anything that maybe we can elaborate on? Anything we can give you more details or information on today? And kind of curious, you know, kind of what some of you are into right now. Are you buying flips? Are you buying rentals? Are you considering multifamily? Things of that nature. Yes.
So my question is that the short term private or private funds and then that the 30 year.
Mm-hmm.
So you have a program where you call government.
That's a great question. And yes, so it used to be that we did the one-time closings quite a bit. For some reason, COVID caused all of those programs to exit the market. We just saw just one re-enter. But what we do for our investors is we can close on the private money side for your purchase for your fix and flip. And then what we can do is we can then roll you in another loan. What we do is we scale all of the fees down and all of that and roll you into the 30-year money as well to so you can roll it to your inventory for your rentals or your buying holds. But we can do that for you. And when we're talking up front, we'll ask those questions. You know, when you buy this, are you looking to exit on the sale? Are you looking to roll this over to your rental inventory? And we have even programs that will allow you to purchase now, sometimes with no origination, and then on the exit of it, we can actually collect the origination when we refinance too and things like that. So we just try to keep our programs very, very flexible in that regard. But we can help on that as well. And we have a program that is very unique. And what it's called a hard money takeout or a day 31 refinance, where you won't run into any title seasoning issues or challenges. So not many people complete an entire rehab in 31 days, but sometimes there's cosmetic deals. The reason it's important though is because when you buy that property, we've had folks come to us and they say, I knew when I bought it, I'd have to hold the hard money note for 4 months, 4 to 6 months, so that I wouldn't have a title seasoning issue. We don't have that problem with us. We can actually refinance after 31 days of title seasoning and exit, and we can exit you at 75% of what that ARV was, right? So we have a couple of investors. I just started the deals that was just top of mind that are exiting deals again in the Florida market and still getting 43 to 52,000 and cash back out at the 75% of that completed value, right? Because they may have gotten some of the rehab funded, but sometimes they have cash into the deal, or they want to pull the equity out for the next down payment, right? So we have programs like that. You basically rarely hear of something like that on the market, right? Most folks don't think that something like that would exist, and we use it quite a bit.
You can cash out based on that.
Sure can.
All the way up to 75%.
75%. Yeah. And if it's rate and term, we'll go 80. Yeah. And on that program, we'll give you 3 options on what you want to do on rate and term. You get to decide. Any other questions?
I've got a stupid question. Well, this is more of a, should I have done this or should I have looked a little more? Back in this opportunity for portfolio, 7 rental
Mm-hmm.
and they were asking on its past, but had I known some of this stuff, what would have been like the max it would have?
When was that?
It was back in this.
Yeah, so man, we would have probably done somewhere between 75 and 80% loan to value on that portfolio, probably under 4%. I mean, if we probably at 1.2, we would have put you on like a 10-year note or something like that because it's a portfolio of multiple properties. But that's probably about we. I know we would have been well under 5% rate. Probably would have been 4.5, maybe something like that. But we can hit 75 to 80% on portfolio acquisitions even now. We love portfolio deals. Um, whether you're buying 5, 10, 20, we had an investor look at 110 units on a portfolio deal. We didn't get that one just because they didn't have all their stuff together, but we can do it. Yeah. Portfolios are a very unique thing because you can buy multiple properties in one shot, right?
It's like
Yeah.
100 to 1,700,
Yeah.
7 properties.
Yeah, I think the last one.
Man, that'd be cool, but I can't afford that.
It's they are great deals. I think the last one we closed was like I want to say 2.1 million. Maybe it was 16 properties. And when you get into the portfolio acquisitions, obviously if you're buying 14 properties, you also have 14 appraisals.
Oh, yeah.
So yeah, most folks are not aware of that. And so what happens is we take a deposit to help us cover most of the cost of all of the appraisals, right? So you might have 10,000 down, but it's not going into our pocket. It's literally paying for appraisals. Yeah. So in the non-QM world, we have a couple of ways of going about that. One depending on the property, if they're free and clear, it's much easier to do. It has to be non-owner occupied still. It has to be part of their rental portfolio. We do have programs that can do like those types of lines of credit for you to go out and buy more, or we can do cross collateralizations where you're saying, listen, I got a few duplexes that have got a ton of equity, but I want to go buy some more single families, or I just want to use some of that equity for these flips. One of our NFL players right now, again in the Chicago area, owned a whole bunch of commercial real estate. And he's building 8 homes, but he said, "Hey, I don't want to put anything down, like none." Right. So we looked at the properties he had free and clear. We were able to cross collateralize the commercial properties that he had bought with cash, and we were able to pull out the money for the cash to make the acquisitions. Right. So it satisfied his down payment requirements and then satisfied the cash requirements that he needed to kickstart the construction. When you're building, you're going to have your foundations and footings and all of that. You could be spending $30,000, $40,000, $70,000 up front before you submit for a job. And in a situation like that, we were just able to cross collateralize other properties that had the equity there as well. And if we're not doing something like that, we also have what's called the exposure lines of credit. And essentially what we do is we pre-approve you to a certain amount that you can use to go out and purchase flips or purchase rentals. I think this week we did a few of those this week, and what the thing about those types of lines of credit, they are still for real estate. So you will still have a down payment, and you still have to order an appraisal, and that's just because of the SEC laws and regulations. And in real estate, there's no way to get a line of credit that just lets you buy real estate without having to go through certain channels, unless it's one of our unsecured programs, right? Where we just give you a pile of cash and you do with it what you please, right? Which we have done that. We've had investors that have qualified for as much as 250 to 350,000 in just a term loan, and they sure did use it to go buy some properties and flip. Skip the appraisal process and all. I personally would not recommend that unless you know what you're doing. Yeah.
Sorry. So let's say that same day, let's say you were like,
Mhm.
Is it possible to get pre-approved for like a certain amount for the tax sale and be able to have that equity there?
Yes. Yes and yes. So we have a link on our site where if you hit that link and input just some basic information, we don't do any type of hard credit check. We just do a soft pull that doesn't hit your credit. And then we can come back to you with real offers on how much cash you would qualify for. And then typically on those types of term loans and so forth, uh, those tend to fund within 3 to 7 days. Cash is in the bank. Now, those programs run in a combination. We can do a term loan anywhere from 3 years to 10 years. We can do also installment loans, and this really unique thing called credit card stacking, which is a term that you just don't hear a lot. But what happens is we have the ability to get access to like these credit cards at 0% for up to 12, 18 months, right? And if you qualify for it, we have specialty lenders that will pull all the cash off of the card, drop it in your bank for whatever the length of term is. And then after the 12 months, it just rolls to like a regular credit card at whatever the market rate is for your score. So we had to go out and find tools like that because we had real estate investors in just unique situations and scenarios. The auction one is one that we hadn't seen for a while. Gosh, it's probably been a few years since we've done since we had the finance auctions. But we used to have a fund that would say, listen, if you're going to go into an auction, because you may not have time for appraisal or anything else, we would only do 50% of whatever they accepted, right? But we do have a program now that they actually just did an auction, closed it in like 3 days because again, time on auctions is limited. But we do have a loan program that might be able to help you if you're buying from auctions as well too. So that is something we can look at. It's brand new on the market. Literally, I think just came back out 2 weeks ago, and they closed the first one with it. And I can't remember the LTV though. It might have been somewhere between the 70 and 80%, maybe because they were going to flip it. I would look, but it's something that we could look at for you. But to answer your original question, yes, you can use that cash to buy auctions, and then we might actually have an auction program that you can use now. I mean, auctions are great ways to grab properties, again, if you understand the process and the properties as well. I tried it. I couldn't jive with it, years ago, just because I take risks, but I when I walk through a property, I got a good idea of what I'm looking at, in terms of renovations, but there's always those gotchas. One of the ones I did last year, it turned out to have termites in one part of the house that we just didn't catch. And it wasn't a big deal, but, so with auctions, you just got to understand the game, right? Other questions?
Yeah. Back to the rehab plan. So you have like cars draws and inspection on.
Yeah, it depends on the program. And so in doing a rehab, like let's say you're doing a 4-month rehab with a $40,000 budget, and so let's just say you're spending 10K per month on your burn down with that. When you submit for the draw, the way that the draws work is typically we have a draw form. You'll fill out when we approve the deal, we use that form to approve it. And so we'll look at it and you'll say, hey, landscaping, 5,000 and kitchen, 20,000, right? So when you submit that draw, we'll send out an inspector. They'll just say, yep, that kitchen's done and the landscaping is done. And, these guys are pretty smart. So they'll look at a kitchen and say, okay, like that's not a $20,000 kitchen. It's more like 5, right? And they'll call you and ask. But most of the time we're good on that. And they'll come out within typically 1 to 2 business days, just check, make sure the work was done ultimately, and then release the wire. When they do that, the cost can vary. It can be anywhere between $85 to $115, but it's built into the loan, so you're not writing a check when you do that, right? So that is a cost that on all of my line items I have that. When I'm looking at the program, I know like if I'm going to do a draw, like okay, I got to budget another $400 just for draws. But the draw processes are pretty easy actually to work with. And some of our programs, it's literally just a matter of the inspector will come out and verify that that work was done and send out a wire. Sometimes if you're buying materials, they might ask just for the invoice, if you had a bunch of carpet delivered or wood or floors or whatever it may be, things of that nature, but it's very easy. Actually going to see if there was, making sure there wasn't any questions that I missed online. All right. Yeah, there's a lot here. And again, after this seminar here, the link will have an instant replay of this for you all as well. So you can go and watch it. You can share the link with anyone you want to share it with, they'll be able to watch it as well, and see everything that we talked about today. What's that?
Do you have an expiration on it?
No, I can keep it up for you. Like, only caveat is, rates change. So I do have to tell you that. So anything we talked about today is probably going to change in a week or so. Right? And it could be for the better. We had one investor had a slightly lower score, came to us for a cash out refi, got a quote 2 weeks ago. And, I think the quote was at like 8% for them given their situation. And they finally came back. They had left town, came back, got a new quote yesterday, and it was 7.1. So it's one of those things where it can change, it can fluctuate, right? And it can be better or it can be worse. One of the things out there in the market as folks are watching what the Fed is doing, sometimes it gives the appearance that rates are just going to be through the roof. And in the private capital market, it's just not true. It's not the way that it is. And so sometimes folks just have the wrong perception, of how it can work. And that's why we tell everyone, if you got a deal, just send over the scenario. We'll price it out and tell you, how the whole structure of the capital will look for you. Okay. All right.